Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So I would say today was a pretty damn lethargic, thin, wacky, good for nothing day. At least for me it was. There were some bright spots and some action, but overall the indices have now been almost in like a 15 to 20 session range where we haven't been up or down more than 1% in a while, where something's getting ready to coil and go. Thank goodness we're stock traders and we could look for the action and we could stick and move and find the spots that have the volume and see where the money's rotating. And while the indices are in digestion mode or stalling mode, because bulls say digestion, bears say stalling, we should see which way it goes soon. We've been able to at least take advantage of some of the action. If you look at the chart of the SPX, you will see that here you go. This was when we had some energy back in this rally. August 3rd is when we ignited on that that Jobs Friday. This was the trend that started back on June 4th that we've continued with, and then this is when traders I think had their best little time frame. I know my time frame from here to here. High beta was going, financials were on the move, money was moving around. For August, it was a pleasant surprise. And then finally we had this outside day. I think that was the day that we switched gears. Went from like 6, 7, 8 longs with a hedge to maybe 2 or 3 or even a little bit net short at times. But since then, look at this tight action. With a defiant support, we have some defiant support, 1395, 1398. I don't think many guys are really pressing that area. We have a defined resistance now where if you were short and we started to get above to get in motion, you know where that is besides the high here. So, don't lose don't get frustrated, don't lose sight of what's going on here. We're still, the 8 and the 21 day are coming together. The 50 days now moving up. It's now, every time I come in here, it's a little bit higher. This is now at 1379, so we're consolidating. We're still above this macro trend, and we still have good action. So at this point, we know what tomorrow is. Tomorrow is the ECB. We're going to have a little bit of a weird schedule tomorrow. I do think the statements come out at 7:45. So 8:30 is the press conference. So I'm going to do the morning call express before 7:30 just to give a quick and dirty of where the futures are, what I'm going to be looking at come 7:45. And then 7:45 we're going to get the statements. Last time I think nothing happened at 7:45. I think I was here with Jill and it happened and we're like, okay, ready, set, go. And nothing happened. And then something started to transpire after the 8:30 press conference. So with that said, I figure 7:45 to 8 I'll get on my radio, and I'll talk about the movement because I do have I think 5 or 6 longs and 1 short. So we'll see. I'll talk through what I'm hearing statement wise and what the futures are doing, and then probably by 8 o'clock things will settle down a little bit and people will say, okay, let's wait for the press conference. Then I'll come back in here and I'll shoot the morning call long form version where you could watch it streamlining it, but so this way you don't have to wait to do it on demand as we're waiting for 8:30. So if you're on the same schedule as me and you're trading, you trade 7:45, 8, boom, things close down. Start watching morning call long form version 8 to 8:20. Then I'm going to go back to my desk, wait for the press conference, put my radio back on and talk about what I'm seeing. Then maybe 8:45 I'll do another small morning call express just to talk about what came out in the statement, what they said at the conference, where things are at, how things are looking. We'll look at the chart of the S&P. We'll see what things are doing. We'll talk about some of the news overnight, blah, blah, blah. So P.S., you go back to the chart of the S&P and you'll see, very, very tight. We start getting above this area. We start getting above just say 1410 to 1415. You start cheating. You see some shorts get scared, and then all of a sudden the high here is 1426. If for some reason, which could happen too, the market starts to break this upper floor, and we start breaking below this area, we'll have to see what happens. We have a point of reference right here, right around 1390. And then you have, again, the trend line here around 1380, which is about halfway here, which has happened a few different times during this rally. So at least we'll know what to expect. As far as today, if you look at Apple, I guess I just messed it up today. If you look where it is macro-wise, it's fully fine. This was your one buy, this was another buy, this was above the highs here at 644. Then you had this whole range type trade here where this is when we sold our swing longs into this move. We had a nice cute short when it went back below this high. 80-20 right there. I got back involved. We had the luxury of being long overnight, right into the Samsung news, and then finally reversal Friday. nice clean move yesterday, and today came back a little bit more than I would have wanted. But again, I don't want to be spoiled. We're still above the 8-day. It still held like half of this move. First things first, people ask me, when I come out on just say Twitter, okay, and I'm like, you come to me and I say, if this stock's any good today in the first half an hour, this should hold. And I have a reason why, because we were up $10 yesterday in Apple. So if it was super duper duper strong, it should have never went down more than like $3, $4. If it was, had follow through, which it tried to do off the bat, which it didn't. That's when I added a little bit too much. It would have just went. If you give back half, it's still strong. Half the gains, but just not as strong. So if you look here at the chart on the 5-minute basis, and I'll show you right here. If you come to the chart now, you will see that on the chart yesterday, okay, this was the move. Okay, this was gapped up. It pushed off the open, came in, and then had a nice methodical move. All into the close. And then, if you look at where the last time it broke out, right around 2 o'clock, was right around, the 6, over this last base was right around, 669 to 670 and a half. So that's why I said, I'm like, if the stock's any good, it should hold this going across. So that's what it did twice. The first one was really easy. First of all, you had this push through failure, which showed you right there that, it's not going to have momentum today. And if you got caught in there, which I got caught in there, thank goodness I was able to buy a lot more down here, and then I got a little bit less risk on when it rallied back up, and then even holding a small amount for the rest of the day, wasn't very easy. So if you make this a little bit bigger so you could see it, so right away, figured if this stock is any good, when I tweeted about it, and it's hard during 9:30 to 10 o'clock to tweet anything because you really, I'm trading multiple positions. I'm on the radio, I'm on my site and Twitter. You only get a certain part of the story because I just have that many thumbs. So anyway, this held the first time. It was a nice little buy, came back up, got back to something I was more comfortable with. Here, it pushed through, did like an 80-20 trade. If this was like a daily chart, this is a great example of an 80-20 trade where, coming down, pushed through support, got people out of their loans, got people short, and then you had a nice, move off that. So that's an example of like a hammer bottom or an 80-20 trade, or you could do it on any time frame. So from here, it wound up giving you another nice move back to the highs. And then if you look at this move right here, I think I was actually tweeting about it. I'm like, you know what? I'm going to add in and take more if we were to close here, because all in all, we would have held a nice, big portion of this move. But this happened and happened pretty quick. I think right onto this move right here is where I got rid of some of my size because I was like, this was pretty potent. It's not going to close that well. And then I held a small amount all the way into the close, which still, all in all, if you look where it is, not the end of the world, okay, because it still just came back to where it broke out from and it held 50% of that day. And if you look where it is on the chart, still not the end of the world. But if you mismanaged it, it didn't pay you well. LinkedIn was a different story. LinkedIn, we've talked about this many times on every different time frame. I know for most of my community, we were watching it very closely, right around 104. 104 was an area. If you remember from earnings, we talk about earnings gaps. We talk about if they don't fill them, that there's still pent-up bullish momentum. Here was that first day at earnings, had a little follow-through. Then it came in, wasn't really ready, and then it started to build a level right here. I remember guys saying they're going to get involved tier 1 on this day versus the low. Then you had a little follow-through, and then what did it do again? It held higher. Then remember we had this day for momentum once it went above 107, and then some guys stayed with it. I actually left for holiday, and I got out of it and never got back in it for that swing trade. And some guys are holding it for a macro move. Guys who are holding it for a macro move, you guys are looking pretty good. 3 quarters worth of good earnings. Stock's just been public for a while, coming to the upper end of the area. The biggest winners in the stock market typically happen from new issues of the previous year or two, and it's in tight hands. The float is definitely small, when there are new issues or they're coming out. So go back to here, and it now cleared another obstacle, another hurdle, and now from here, hopefully it hangs higher, and then at some point it could be taking out these highs. It's definitely not the Facebook you're looking for. So it's just like a tale of two tapes. This was a really good hold, swing trade, and macro investment if that's what you're doing. And guys, even on the daily, a lot of people didn't come in long it today, and you were able to buy it in the first few minutes. You had a gap up, right here, held, went sideways, and some people were looking right here and got long that didn't have any position, didn't get a pull in, and figured above 112 they're going to get long, and you made $2 on this active trade if you came in flat. Unfortunately, I was too involved with Apple and I missed what was a much better day trade today here. But so going back to something different, a different type of strategy, when we were on morning call this morning, guys were like, what about Facebook with the news about Zuckerberg holding for a year, this company saying that they're bought back stock, or they did a buyback at 19 that they sold at 38, whatever. I was like, this is the way you do it. We're going to gap up. We're going to trade it versus that gap. If the stock's any good, it doesn't fill it, and it'll be calculated. Maybe we'll get a great cash flow trade, maybe not. Or who knows, maybe it turns into a swing trade, because you could trade it versus that bottom. I'll talk about whether you're an active trader or a swing trader. So here you go to Facebook, okay? Just to show you the intraday tactic of it, here you go. It really doesn't get much better than this, okay? It gapped up. Just show you right here. Gapped up right there. This was your first initial move. Gapped up on the open. So right there, this is that first bar, and this is your low, right? 818, because I remember saying it a few times. Gapped up, shorts trapped. People went after it. If it was any good, it would keep the shorts trapped, and people wouldn't wait for a dip to buy. They would just want to get in there. So lo and behold, what did the stock do? The stock started to flag. Right? What's this, a bull flag? We talk about bull flags all the time. It's consolidation for a potential up move continuation. So here's the pole. Now you have the high here too, right? Here's where it peaked. It's consolidating. It's trying to absorb whatever 3% this was. I think I got involved like right around here. I'm like, I'll buy some, 1830s versus this 818. Start to build a high level flag, consolidating this gap with pent up momentum. And then after a little while, guys added right here. I think this is when I added, when it went through. I actually added, I think, through 1850, 1855. And you had a nice move to almost 1870. Nice day trade with a stock that's been crushed, annihilated, pain all around the world, a media punching bag. But for an active trader, who's let it open up, saw it consolidated, saw a pivot be created, 1818, you got involved right here. So what'd you have? You had like 20-cent risk. Then here it started to go, get into motion. I always say that, it's getting into motion. You could have bought right here around 1840, or maybe between 1840 and 1855 to get to a tier 2. So tier 1, tier 2 makes new highs. You sell into excitement, get back to tier 1, and then you hold tier 1. And what turned out to be, a nice move for the rest of the day. Went all the way back to 1875 before, coming in and closing in 1860. So now if you're an active trader that doesn't take overnight positions, you get out. If you're a swing trader and you bought it in here using this gap as a rationale, as a pro gap, and you say, okay, I'm going to hold this now until it beats me. 1818 is my stop. You made a little, you had here, you bought here, you made some cash flow, and now you trail it. And who knows, maybe this was the bottom of Facebook. You don't know. You need a lot more time, a lot more data, but you finally have a green bar. You finally had a good news, or somewhat. So see what happens. There's a gap that could be filled here to 1906. So we'll see what happens if it goes sideways. Maybe you even add above 1875 for a gap fill to 1906 and you get out of some. And then, I would say the real resistance comes in here around 2013 and then even up to 22. Who knows? We've seen crazier things happen. But overall, at least you have a defined strategy. And on this one, it was very active, okay? Very, calculated. This is like day trading 101. Gap up, go sideways, continue higher. Tier 1, tier 2, back to tier 1, and then just hold. So with that said, I just want to show you, the tale of two different social media stocks. One acting well as a macro investment, one that you could have also bought as a swing versus a gap, on earnings that took a little bit of time. And this one was a news gap and at the lows and different type of strategy. So there you go. As far as Google, it still holds up well. Amazon, we were trying to short it yesterday and just didn't stay with it, and I still think it's fine. I just need some time. As far as Goldman Sachs, that was some day on Goldman Sachs. Say, wow, you go to the daily chart here, and I wasn't really expecting. We talked about it in the sector spotlight. Went over the banks, and look at this nice extension. I actually drew this resistance this morning. I'm like, you know what? I'm like, Goldman, had a nice move. This was your pivot buy right around here, and the reason why we were watching it was because of this potent move off the lows. So you had a potent move, some commitment. Here's an initiation, and then today it extended, got some momentum, closed near the highs, while it didn't really drag much of the other banks. So it was pretty interesting that happened, and this was the resistance, and we'll see what happens into that tomorrow. JP Morgan, I was long all day. Didn't really give you much, but we'll watch it for tomorrow. This range is getting tight right now, okay? Getting tight. So with that said, you maybe be in tier 1 here or a feeler here. Then if it starts getting above 37.40, you add for some motion. If it starts to break this area and you don't want to be committed to it, you get out and then you see how it handles the 50-day. So we'll see what happens with this tomorrow because Goldman triggered and maybe JP's waiting for the ECB to see what's going on. Not much else took place today in the banks. Morgan inched up a little bit further. Citigroup's getting pretty tight also, actually. Citigroup's nice little wedge type pattern right here. So we'll see if this could expand tomorrow. So if JP Morgan goes, maybe this one could have a decent move too. If it starts getting above 30.19. This morning, I also tweeted about the ags. I haven't spoken about the ags in like a week or two. Then early morning when the futures came in, the ags went higher. And I'm like, ooh, a little relative strength divergence in the ags. Unfortunately, again, I was tied up in too many things. Guys in the community took advantage of it, but I wasn't able to start positioning, and I was going to think about calling Jill and be like, oh, what's going on with Mosaic? Meanwhile, she says she still loves it. And, CF, Monsanto, AGU, those are the ones that I actually look at all the time. If you look at CF, not a blockbuster move, but you had a really big move from just say June, pulled back, pretty controlled, and then today gave you a nice move off support, closed relatively strong. So we'll see if that continues. Mosaic was, even look at the power here. Mosaic was actually able to take out the highs of this little area, holding the 50-day. And now if you take more of a macro approach here, there's a big area. So you have a nice little channel here. Look how this held higher. We talk about holding higher and a gap. Here is that red dog reversal low, just so you can take a look at it, how, if you're a swing trader, look what and you saw this happen and traded through level, came back up. You got involved here and said, I'm going to buy back above the low here was way back where, so I'm just not going to go back there and be perfect, but just say 45.50, put in, went back above it. You put your stop in at 44.43, 50 cents after this thing's been annihilated. You had a good day and a half trade, or even more if you stuck with it. And if you missed this and said, okay, I'm going to use Red Dog's gap analysis here, look at this gap up right here. Never filled it, showed some commitment. Let's keep it on the radar. Boom. Here's your tier 1 long, there's tier 2, and then it continued all the way up. Then remember this gap right here? Look how long it's been going sideways, still holding a majority of the gap, still showing you pent-up momentum. And then finally today it ignited, and at some point now I think there'll be a move above resistance. So you definitely could be in tier 1 Mosaic, and this moves from the C plan back to the A or B plan, as it looks, like it's back in play. So this just shows you how, you have to have your game plan, you have to have a list, your A, B, and C list. When stocks start getting set up in motion, you put them on the A list. When they need time, you put them back on the B and C list. We saw that with gold. Remember, gold was on the A list a few times and failed, and then we put it on the BC list. Then finally it went, and now it's been on our list every single day, gold and silver. And if you look here, this is when it changed right here when this broke. Another nice little wide range bar to keep it going, and now it's flagging again. Macro guys are saying this is just the beginning, but we shall see. But at this particular point, if you look at it, nice. When we talk about commitment to a move, look at this wide range bar that you had here, and not much of a pullback. I was hoping to see a pullback to 162.47, kind of like what happened here, where it came in halfway, before continuing, but who knows? It's holding in tight. It should continue. I'm in small. Starts getting above this level tomorrow, 164.77. It goes in motion. You could add, so you can keep tearing in and tearing out. So anyway, there's still a lot to do, and I know that today, I think I just got thrown off a bit and didn't perform the way I should have, but it is what it is. It was still definitely quiet. The indices are getting tight. Got a lot to look at tomorrow. Then we have jobs number Friday. So we'll just play it as it comes. Don't be all in, but don't be all short. Don't we're keeping one foot in the door, one foot out the door, but we don't want to keep the door closed because there is a lot going on in the equities markets and there are guys making money. So if you want to be one of those guys, just have an open mind and just keep learning and keep evolving and keep educating yourself. And that's what the pros do all day long. We just keep trying to get ourselves better, stay focused, and stay in the game. And again, a lot of stuff coming out tomorrow, Friday, and even next week. We have the Germany Parliament vote, then we have the Fed. So it seems like every day there's going to be stuff to focus on. So we know what's going on, but then we focus on the action. And if you go where the money is, there's a lot of opportunity. Scott Redler, T3 Live, the recap. See you at the morning call. I told you about the schedule. Make sure you know it tomorrow. Bye-bye.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.